Investors and traders, welcome to the channel Market Chart Pattern. Today is 24th of June 2023 and I hope everyone is having a great weekend. In this video, we are going to take a look at something different, something perhaps a little special. We are going to take a look at analog, something which happened 20 years ago. It appears the stock market might be doing the same thing again. It's pretty uncanny in my opinion. This video is for educational purposes only. It is not a financial advice. So guys, what we are looking at is basically an analog. What is an analog? An analog is something we try to compare against which have happened in the past. So what we are trying to do here is we are going to take a look at the S&P 500 from the period of 2002 to 2003. We are going to take a look at some key dates and we are going to compare it with S&P 500 price action of 2022 to 2023, and some of these dates are pretty uncanny, and it appears what happened 20 years ago in the stock market might be happening again. So guys, what we are looking at in this upper chart, upper pane, is the S&P 500 from the period of 2022 to 2023. This is the recent price action. It's marked in the black line, and what we have below is the S&P 500 price data from 2002 to 2003 marked in blue. And I've also marked these key dates in red horizontal line. So we will discuss these in more detail, but before we do that, I am just going to turn this into candlestick charts, and here we go. Now we have these in candlestick charts, and here what is important is basically these dates which we are marking here. I've used the candle charts to mark these important dates, and now I'm going to turn these back into the line chart because I think visually it's easier to see it here, but the line charts are a little bit not as accurate in terms of the highs and the lows compared to the bar chart or the candlestick chart. Okay guys, so here what I want to bring to the attention is that in the recent price action, the S&P 500 bottomed on 13th of October 2022. So that's marked here in this red line here. And if we look at the data coming in from the 2002 to 2003, we also have the S&P 500 bottoming in October. In fact, the data I'm getting is 10th of October 2002. Again, fairly close to each other. Now, there is one more data point on the left. This is the peak. I'm not going to discuss this one in too much detail. We are going to move forward, and what we see is that we have another key date come in where the 2002 and 2023, excuse me, 2022 and 2023 in the March 13th 2023 formed an important bottom here. And when we look at the data for the 2002 and 2003, 12th of March 2003, we had an important low, and look what the market did. It kept on going higher till a specific date on the 17th of June 2003, and that's when it began its correction. So if we look at our current I'm going to delete this because we'll just go this in more details. This way the date is more visible. And if we look at the current price action, what we see is that after forming a bottom on the 13th of March to 2023, the stock market has been moving higher till a specific date, which is the 16th of June 2023. That's right here. That's when it topped, and we believe per our analysis and the charts that we have been posting in the videos, some completed patterns, that we are in a correction. Now, we are going to go a little bit more in detail of this analog and this correction and try to analyze the data coming from 2002 and 2003 and figure out, okay, how much was the correction back then, and based on this analog, what can we expect this correction to be for 2023. And also we'll try to use the time as a guide as well, but time is more elusive, to try to get to a date when this correction could perhaps end, but don't hold me to it because time is more elusive. But we are going to, you know, try our best to get some sort of a date range for us to be able to work towards. Okay, so one of the things, guys, I want to bring to the attention is the price action between the October and the March 2002 and 2003. In this, the market actually bottomed and kept on going higher, and then it went into a quite a prolonged correction. And it's a correction because this high did not take out these highs right here, and that was a fairly sort of correction, but in fact it was also accumulation which was taking place here. Similar story in my opinion. This is also accumulation. However, the key difference is that this high is higher than this, so it's a higher high. This and this low is higher than this, is a higher low here as well. And we will just get back to it in analyzing our in terms of the timelines for the correction. And we will basically, after starting a new high, making a new high, it's in fact a new wave pattern. Okay, so what I'm going to do now is just going back to this tab here, and we have the market of 2002 and 2003. It's a little blown up here, and this region we are looking here in the shaded area is where we are now in terms of the month of June. And when the correction started around the 16th or the 17th of June 2003, it's fairly uncanny that 16th of June 2023, 20 years later, we might be at a similar kind of a date for a correction. So what I wanted to point out was that just using the tools from the trading view, this correction was about 4.65%. So it was fairly shallow, 4.65%. In terms of the timeline, it took about 35 bars or 50 days. I believe these are the calendar days. Now we'll just go back here, and we'll try to use this data of this analog and try to see what this 4.65% correction might be in terms of the S&P 500 values. So 4.65% roughly comes around 42.23, but we'll just give it a benefit of doubt, and let's say the correction might be somewhere around 5%. So in fact this tool is giving 5.06%, so roughly about 4200 is what we could expect. So about roughly in the region of 5%, fairly shallow correction in my opinion to be expected in the S&P 500. Now looking at the timeline, so about 35 bars or 50 days. One of the things we are going to do is, because a higher high here, we're going to, and then it went into a correction here, we are going to borrow a concept of Elliott waves. I believe it is an Elliott wave, although I do not follow Elliott wave in our analysis. My analysis is more on harmonics and pattern recognition. But there is something called a alternate wave uh, alternate wave in terms of the correction. I was just trying to recall. What it means is that when a corrective wave, if it has been a longer one here, then we could expect a shorter wave. Now I'm not sure whether it comes into time side of things or price side of things or both. Not sure of that, but we'll try to assume that we had a fairly longer correction in terms of timeline here. So in fact, let's use our tool. Where are you? Here we go. So we use this to this. So that was a correction of about 26 bars and about 39 or 40 days roughly. And if we use the same tool, and this time we say okay, this time it is going to be of slightly smaller time frame. So if we take 13 bars, so 13 bars, it's actually bringing it to Wednesday 5th of July 2023. With this analysis, time is elusive, we should give it plus minus 2 trading days, but roughly speaking I think we can mark this here as 5th of June. I'm going to mark in a different color to make it different. So let's mark it in blue. That is, where we could expect perhaps this correction to end just right after the holiday, 4th of July in the United States. So fairly interesting from a time perspective. Let's actually also write this 5th of July, important date to watch. Okay, let me put a question mark. I am going to make it fairly small. Let's say 14. It's just that we remember. Okay, so guys, this is what we are looking at in terms of an analog, where we are trying to compare what happened about 20 years ago. We have got some really key and very interesting dates which really line up nicely. It looks like we have an analog which is working right at the moment, right here, right now. One of the things about analogs is that they keep on working till the time they stop working. So what we will be doing is we will be making use of this analog and going through it at least once a week in our weekly videos, which we do for the key US stock indices. That way we will know that, okay, whether we are actually hitting those key dates per our analog, something which happened 20 years ago, or whether something is changing and that analog perhaps is not working any longer. In that case, we'll have to actually go and find something else, maybe another analog, where the market might be attempting to follow that one. But for now, it looks pretty nicely that these dates are coming in very nicely, and it is giving us some sort of a roadmap that we can look forward to. And if we are in a correction, it is expected the correction per the analog could be pretty shallow, about 5%, which could roughly take us to about 4200 on the S&P 500. So again, I'm using the SPX. And in terms of the time, we are making an attempt. Don't hold me to it. Time is more elusive. So we are getting a date per hour analysis of about 5th of July, where we could expect this correction to end if indeed we are in a correction. So thank you very much, guys, for watching the video. Please do let me know in the comments how you find this analog, whether you find it interesting, and we will of course be following it on weekly basis. Keep on next. So tomorrow I will be releasing a video that's gonna be the weekly update on the US key US stock indices that we follow, and in that we are going to go more in detail about the actual price levels and the pattern formations that we are watching for, the completed patterns, and what to expect in terms of the price levels. So thank you very much for watching the video. I hope everyone is having a great weekend. If you like this video, then please do smash that like button. Really appreciate that. Thank you very much. Good luck and good trading.